Okay, let's unpack this. Think about something really simple, something you probably have in your kitchen right now. Potato chips. You grab a bag, munch away. Seems pretty straightforward, doesn't it? But, well, what if I told you that behind that snack, there's this massive, multi-billion-dollar global industry, and it's got some really fascinating regional dynamics going on. Today, we're doing a deep dive right into those dynamics. We've got an excerpt here from a global potato chip manufacturing market forecast. And trust me, you're going to see chips in a whole new light after we dig into these numbers.
Absolutely. It's kind of amazing how something like a potato chip
Mhm.
can tell us so much about, global consumer trends, economic shifts. It's not just the headline number or the overall size, though that's impressive. It's really the stories hidden in the regional data, the country growth rates. That's where you really get a feel for what's happening on the ground, and a real shortcut to understanding this huge industry.
Right. So let's start with that big picture then. And it is big. We're talking billions here. Back in 2021, the global market for manufacturing lines, the equipment essentially, pulled in almost $4.5 billion. That's 4,446.95 million to be exact. And it's not stopping. Projections show it growing to over 5.1 billion by 2025, and then reaching at this over 7.1 billion dollars by 2033.
Yeah, and that translates to an overall growth rate, the CAGR, compound annual growth rate, of just under 4%, about 3.987%. Now, for a market this, well, established, nearly 4% growth year on year compounded, that's actually pretty healthy. It signals, consistent, steady demand expanding right across the globe over the next decade or so.
That's a huge amount of chips, a massive market, clearly still growing strong overall. But like you said, the interesting stuff happens when we break it down by region. Let's start with North America. It's a giant, right? Over $1.28 billion in 2021, projected to hit almost $1.95 billion by 2033. Huge numbers. But here's the kicker, the real aha moment. Despite that size, the overall growth rate, that CAGR for the whole region, is tiny, marginal, at 0.034%. That's basically flat, isn't it? Especially when you compare it to that global average of nearly 4%. What's going on there?
Well, that's the paradox, exactly. And it really makes you question how we look at these regional averages sometimes. Because while that tiny number, 0.034%, suggests the whole region is stagnating, if you dig just a bit deeper, the individual countries tell a very different story. Take the United States, still the biggest chunk, over $1 billion in 2021, and it is growing, projected to reach over $1.5 billion by 2033, with a Canada of about 3.2%. So healthy growth there. But then look at Canada. It's really motoring along, over 4.3% CAGR. And Mexico, too, showing really strong growth at over 4% CAGR.
Wow, okay, so the U.S. is growing okay, but Canada and Mexico are growing even faster within the region.
Exactly. So the overall super low average for North America, it seems like it might be heavily skewed, maybe by the sheer size of the U.S. market masking the faster growth in Canada and Mexico. Or maybe it points to something else within the U.S., perhaps market saturation for traditional chips, while Canada and Mexico might have, evolving snack habits or distribution channels expanding faster. It's a great example of why you need to look beyond the headline regional number.
That really is telling. Okay, so that's North America's paradox. Let's hop across the Atlantic, Europe. Here we see a different picture again, but still with its own nuances. The market grew from about $831 million in 2021, and it's forecast to hit over $1.25 billion by 2033. That's a solid TGR of about 3.4%. So closer to the global average, but not quite as high.
Right, steady growth. And within Europe, you see some real standouts. France, for instance. It's showing the strongest growth in the region, actually, a 4.6% KGR, going from roughly $95 million up to $160 million by 2033. Italy's doing well, too. Solid growth, nearly 4% TGR.
Okay, so France and Italy are buzzing. But then here's where it gets really interesting again, right? You look at some other countries, particularly in the Nordics. Sweden, its CAGR is only 0.765%. And Denmark is even lower, just 0.703%. That's barely moving.
Exactly. Less than 1% KGR is essentially stagnation. It's almost flatlining. You really suggest those markets might be, well, maybe highly saturated.
Yeah.
Or perhaps consumer tastes there have shifted away from standard potato chips more significantly than in, say, France or Italy. Could be health trends, could be preference for other snacks.
Yeah.
Lots of potential reasons.
Fascinating. Big cultural differences in snacking, perhaps. And then there's this category, rest of Europe. This is like all the other European countries bundled together. And that category is showing really strong growth. It's expanding from nearly $200 million back in 2021 to over $340 million projected by 2033. And its CAGR is impressive, over 4.6%, higher than France even. What's driving that?
The rest of categories are always interesting in these reports. What it usually signals is diversified growth. It means lots of smaller markets, maybe in Eastern or Central Europe perhaps, are individually growing quite strongly. None might be big enough on their own to make headlines like France or Germany, but collectively, they represent a really significant growth engine for the region. Often these are economies where disposable incomes might be rising or modern retail formats are expanding, making snacks like chips more accessible.
Right, like a bunch of rising stars creating momentum together. Makes sense. Okay, let's move now to the region that the data clearly points to as the powerhouse, Asia Pacific. This region is not just the largest market overall, starting at over $1.7 billion in 2021 and projected to hit nearly $3 billion by 2033. But it's also the fastest growing overall, a really high CAGR of almost 4.6%.
Yeah, Asia-Pacific is undeniably where a huge amount of the action is.
Wow.
And the growth drivers there are remarkable. Look at India. The report mentions the sharp rise there. It has the region's highest CAGR among the larger economies, over 5.4%, expected to hit over $566 million by 2025 alone. And then you have Singapore leading regionally with an incredible CAGR, almost 6%, 5.984%. And Southeast Asia as a whole. That subregion has the highest overall CAGR in the entire report, just over 6%.
Wow, 6%. That's really flying.
It really is. And it's not just those hotspots. Even the more established huge markets like China and Japan are showing strong growth too. China's got a CAGR over 4.1%. Japan's very similar, also over 4.1%. So across the board in Asia Pacific, you're seeing this powerful combination of factors. Rising middle class, urbanization, changing lifestyles, maybe a faster adoption of Western-style snacking. It's all driving this incredible growth.
That growth in places like India, Singapore, Southeast Asia, it's phenomenal.
Yeah.
Really points to rapidly changing consumer landscapes there.
Okay, but Asia Pacific isn't the only region showing really strong growth. Let's not forget South America. This region generated over $306 million in 2021, but it's projected to climb to over $540 million by 2033. And check out its CAGR over 5%, 5.024% to be precise. That's even higher than Asia Pacific's overall rate.
That's right. South America is definitely a region on the rise in this market. You've got some really high growth nations there. Argentina, for example, showing significant expansion at almost 5.8% CAGR. Colombia is right there with it. Very similar robust growth, about 5.7% CAGR. Brazil, the largest market there, is also showing solid growth, over 4.6%. And again, that rest of South America category is also posting strong numbers, over 5.3% CAGR. So it's broad-based growth across the continent.
It's really clear then, South America loves its savory snacks, and the market for making them is expanding rapidly. Argentina and Colombia are really leading that charge.
Definitely significant potential and strong current growth there. Okay, finally, let's touch on the Middle East and Africa. These regions might be smaller in overall market size currently, but they show emerging opportunities. The Middle East market, it grew from about $173 million in 2021, projected to $241 million by 2033. The core GR there is a bit more modest, around 2.6% overall, though UAE is a bright spot, highest in the region at 3.7%. Egypt's also showing decent growth, around 3.2% CAGR.
Correct. And then Africa, starting from a smaller base, about $80 million in 2021, but projected to grow to over $136 million by 2033. Its overall CAGR is actually quite strong, almost 4%, matching the global average. Key contributors there are Nigeria and South Africa, both showing CAGRs around 3.6%. And interestingly, just like in Europe and South America, that rest of Africa category shows the strongest growth momentum within the region, over 4.3% CAGR.
So again, that pattern of growth spread across many smaller developing markets within the continent.
Exactly. So while these regions, the Middle East and Africa, are smaller markets today compared to, say, Asia Pacific or North America, they definitely demonstrate significant future potential. That growth in the rest of categories often points to untapped markets, increasing urbanization, and expanding retail infrastructure, which makes these kinds of products more widely available.
Okay, so we've done a whirlwind tour around the globe, looking at potato chip manufacturing lines. What does this all mean for you, the listener?
Well, we started with a simple snack, right? And we've ended up mapping out this really complex, fascinating global economic story, full of surprising highs, like in Southeast Asia or South America, and surprising lows, or at least complexities, like that overall flat line in North America despite internal growth or the minimal growth in the Nordics. It really just goes to show how much you can uncover when you, well, dig into the numbers. It really does. And if we try to connect this back to the bigger picture, these really varied growth rates we've seen, they're not just about potato chips, are they? They raise some important questions like, what do these specific consumption patterns, these manufacturing market trends, tell us more broadly? about economic development, maybe about cultural preferences shifting, about where consumer wealth is growing around the world. Are there links we could draw to other consumer goods? Or even to bigger macroeconomic indicators? It's quite suggestive.
That's a great point. It's a lens onto much bigger shifts.
And maybe a final thought to leave people with. Considering these huge differences in growth, the booming markets in Asia Pacific and South America compared to the much slower pace in parts of North America and Europe, how might these trends reshape the future? The future of global food production, maybe? Supply chains? And perhaps most fundamentally, what does this imply about the global snack palette of tomorrow? Where will the demand and the innovation truly come from? Something to think about.
Okay, let's unpack this. Imagine something so common, so everyday, that you probably give it, well, zero thought beyond grabbing a bag. We're talking about potato chips. But today, we're not just diving into the crispy snack itself, we're peeling back the layers on the entire industry behind it. The global potato chips manufacturing line market. Our mission, as always on this deep dive, is to kind of cut through the noise, pull out the most important nuggets of knowledge, and leave you truly well-informed on a fascinating topic. And for this particular deep dive, yeah, our insights are sourced directly from the comprehensive research by Cognitive Market Research.
Yeah, and what's truly fascinating here is how a seemingly simple product, like a potato chip, actually reveals so much. We're talking global economics, the cutting edge of technological advancement, and even, critical environmental concerns. You might be surprised by the sheer complexity and innovation required to achieve that perfect crunch consistently for billions of consumers worldwide. It's kind of wild.
That sets the stage perfectly. So, to truly unpack this industry, we first need to understand the incredible forces propelling it forward. What are the big drivers pushing demand for these high-tech manufacturing lines right now?
Well, the foundational driver is undeniably the surging global appetite for packaged snack foods. It's huge. We're witnessing a perfect storm of contributing factors, increasingly urban lifestyles, a steady rise in disposable incomes, and of course, the massive acceleration of e-commerce and food delivery apps. This isn't just a trend. It translates directly into major global brands and even nimble local players investing heavily. They need state-of-the-art, high-capacity, hygienic, and fully automated chip production lines just to keep pace with that soaring consumer demand.
That rise in demand makes perfect sense. But what truly intrigues me is how technology is woven into this demand. How exactly is that playing out on the factory floor?
Oh, automation and innovation are absolutely central. They're becoming non-negotiable for efficiency, really.
Hmm.
According to the research from Cognitive Market Research, today's advanced potato chip lines are equipped with things like AI-powered inspection systems. These can spot a tiny imperfection in a chip faster than, the human eye.
Wow.
And IoT connectivity, that's machines talking to each other, sending data in real time about everything from temperature to oil levels, stuff like that. We're also seeing widespread adoption of energy-efficient fryers.
Okay.
The core insight here is that for a global chip empire, the perfect crunch isn't just about taste. It's about intelligent automation that slashes waste, optimizes labor, and ensures consistent product quality. So these technologies become essential investments.
And it's not just the global giants demanding these sophisticated lines, is it? We're seeing a real surge in regional brands as well. Yeah.
Exactly, yeah. What's truly fascinating is how the rise of regional snack brands and private labels is actually driving innovation in flexible, more specialized machinery. This is particularly evident in fast-growing markets across Asia-Pacific, Latin America, and the Middle East. These local producers are carving out niches with unique, hyper-local flavors and, flexible packaging formats. Their specific needs mean they're looking for adaptable, compact, and modular machinery that can quickly switch between different products and batch sizes. It's completely different demand profile than the massive standardized lines the global players you see.
Right, right. Adaptability. So, okay, we've seen what's pushing this market forward with such impressive force, but where there's explosive growth, there's always friction. What are the key restraints, the hurdles that can slow down investment in these advanced production lines?
Well, the most immediate challenge is undoubtedly the high capital and ongoing maintenance costs. That's a big one. Setting up a fully automated production line isn't just about buying the equipment. It's a significant upfront investment in the machinery itself, yes, but also in specialized infrastructure, training skilled labor,
Right.
and then the continuous expense of maintenance. For small and mid-sized enterprises, this can be a colossal barrier. It often requires support like leasing options or even targeted government incentives to make that leap.
Beyond the money, what about the regulatory side of things? How complex does that get for manufacturers?
Oh, the complexity of regulatory compliance is a massive hurdle. Seriously. Food safety rules are incredibly strict, and critically, they vary significantly by region. You're talking about navigating everything from the FDA in the US to FSSAI in India or the stringent EU hygiene standards. It's a lot. This demands high-grade, food-safe materials in all equipment, sophisticated automation for full traceability through the production process, and costly clean-in-place systems. Those are automated washing systems that keep equipment sterile without manual dismantling
Okay,
and
yeah.
failing to comply. Well, that can result in severe fines, product recalls, immense reputational damage. It's a nightmare scenario, particularly for manufacturers exporting across borders.
And what about the star of the show itself? The humble potato. Does even the raw material pose a challenge?
Absolutely, it does. Volatility in raw potato supply is a very real concern, a constant headache for some. We're talking about issues stemming from, seasonal variability, unexpected droughts, and broader global supply chain disruptions. We've seen plenty of those recently.
Yeah.
This has a direct and immediate impact on production because the quality and consistent availability of potatoes directly affect things like frying efficiency, the amount of oil needed, and ultimately the consistency and quality of the final chip product. It's a foundational vulnerability, really.
So, we've explored the powerful drivers and the significant challenges. Now let's look at how innovation is actively rewriting the future of this industry. What does this all mean for what's next in chip production?
Well, sustainability is front and center as a major trend. It's becoming a true differentiator now. Manufacturers are increasingly turning to energy-saving fryers that use less power, water-efficient peeling machines that minimize water consumption, and critically, developing fully recyclable or compostable packaging.
That's huge.
And this isn't just good PR. It's directly tied to rising ESG, environmental, social, and governance targets, and green procurement policies. This is particularly prevalent in regions like Europe and North America, where eco-certified equipment is gaining significant market traction. It's becoming a business imperative, not just an option.
It sounds like smart technology isn't just about making chips, but also making the entire process smarter and more efficient. Is that right?
Precisely. Smart tech integration, drawing from Industry 4.0 principles, which is essentially the fourth industrial revolution, fusing physical production with digital technology, is now baked into modern chip lines.
Okay.
This means real-time dashboards giving operators instant insights, predictive maintenance alerts telling you a machine might fail before it does.
Wow, predictive.
Yeah, and remote diagnostics allowing technicians to troubleshoot from afar. The benefits are clear. Significantly boosting uptime by preventing breakdowns, automating fault detection, and streamlining inventory management. It transforms the entire operation into something far more responsive and reliable. It makes you wonder, doesn't it, how much thought goes into something we just casually grab off the shelf?
It really does. And finally, for us, the consumers, it seems like choice is king. How does that translate to the manufacturing line?
That's right. Flavor and packaging flexibility is now pretty much non-negotiable for manufacturers. Consumers today demand incredible choice, from spicy masala and seaweed to gourmet truffle and vinegar. You name it.
Yeah, the variety is incredible.
Totally. So this means the machinery itself needs to be highly adaptable, enabling rapid changeovers and diverse batch runs. A single line might need to produce a whole range of flavors, different chip shapes, maybe multi-pack formats, all with minimal downtime. It's all about meeting those diverse, ever-evolving consumer preferences with speed and agility.
So, as the comprehensive research from Cognitive Market Research confirms, the future of potato chips isn't just crispy. It's smart, sustainable, and incredibly customized. It's truly amazing to see how a product we often take for granted is at the forefront of so many technological and market shifts.
Yeah, and if we step back and connect this to the bigger picture, it raises an important question, I think. If something as ubiquitous and seemingly simple as a potato chip factory is embracing AI, sustainability, and customization at this level of sophistication, well, what does that tell us about the future of nearly every industry around you?
That's a great point. Whether you're a snack entrepreneur, an equipment manufacturer, or just someone who enjoys that perfect crunch, this deep dive shows there's always more to learn. We hope you feel a little more well-informed now. Until next time, stay curious, stay informed, and don't forget to grab a snack.